right, Tron Black. I'm excited to dive in with you, sir. Maybe we'll start with a very simple prompt here. Can you give me, in your own words, your description of your background and what you're most interested in the world today?
Sure. Brief background. I'm a computer scientist. I have an MBA. I'm an entrepreneur. I started companies and I sold a couple of them. And my world changed in 2013 when I ran into crypto. It kind of resonated on a whole bunch of levels. That's the short version.
Yeah, no, I love it. That's plenty of room to dive into different areas. What was the project? What was the initial foray that you saw? Was it just reading Bitcoin, or was it something different?
So I would imagine that I probably saw crypto prior to actually understanding it. Something that's kind of as generic as mining. It sounded like something like the computer was grinding on something to kind of create this thing, and that was like I guess in my mind I had imagined it a certain way, right? That what mining was, right? It was trying to create this very hard to construct thing that was a coin, which isn't the case at all. And so that was I kind of ignored it. I think the first time, probably saw it 2011, 2012. Obviously regret not diving into it then. And so it wasn't again until 2013. And the actual thing that caused me to see it again was I was interested in what was going on in Cyprus. And in Cyprus at the time, they had shut the bank doors, and they were basically telling the people in Cyprus, hey, we're going to take your money. We're having financial crisis. We're just going to take, a certain amount of money right out of your bank account, and then we'll open the bank up and you'll have less money. And so this was like a big news story, and the type of thing I was following at the time. And so the answer, and something that somebody said was, hey, the answer to this is Bitcoin. You can't just take it away. I'm like, oh, okay, interesting. I've heard of that, but what is? And so that's when I dove in. So that was probably early-ish 2013.
Yeah. What an amazing. It's tough. I always find it's difficult to label things as good or bad, because while that experience for the bank holders or for the account holders of the Cyprus bank accounts was terrible, the result was that, like you, and I've heard that story before, and other people talk about that as motivation. It's like, well, it creates a backlash. Once there's a problem that's observable and recognizable and it's widely publicized, you just look for what's the solution here. And I think that just pours fuel in the fire to the Bitcoin project in 2010, 11, 12. Yeah. So catch me up. So Ravencoin is a very big project that's now going on. I looked recently, and it's approximately $1 billion US equivalent market cap. Yep. I read through the white paper of Ravencoin, but how do you articulate briefly the unique goal of Ravencoin?
Yeah, so to keep it really simple, just sort of like the elevator pitch would be, it's Bitcoin, but for assets. It's the ability to create your own token, your own asset, and then what that asset represents will be up to the issuer. So it uses the same technology, same code, same UTXO model as Bitcoin, but you create the tokens and then you own them all. Now there's also a Raven, the coin, RVN, and it acts like Bitcoin. There's a higher issuance than Bitcoin. It's 21 billion with a B instead of 21 million with an M, and it has the value, and that's what you're referring to when you talk about the market cap, right? It's the price of Raven times how many have currently been issued, which is still going up, but with a cap, right? With a cap like Bitcoin, but it's the ability to create your own asset. So you create it. You can attach what your asset is to a file via IPFS. So an immutable file, one that can't be tampered with. You can't promise that, this is a share of something, and then as the issuer kind of change that file. Once you've established that file can't be changed. Just the nature of IPFS and the way Ravencoin works with that by putting the hash of the file inside the chain. And so you can say, it can be a share of a company. It can be, people have done all kinds of things. Fractions of wine that's not ready to drink, whiskey that's not ready to drink, property that's shared property in another country, a whole rental property, gold, just all kinds of things. It's tickets
and the file. Right, and the file would be a text-based. Is there a particular format that there's a restraint to, or
in fact, not only is there not a restraint, you can have a folder, so you can actually put an entire website attached to a token name that is a folder full of files. It's the nature of IPFS. So IPFS, if you're not familiar with it, look it up. I mean, not you specifically, but your listeners. IPFS is IPFS.io. You can just go there. It's it stands for Interplanetary File System, and you take a file or a folder and you basically put it into this. We'll call it a network. It's sort of a decentralized network. You throw it in there, you get back a hash. The hash is the file reference, right? So if the file changed, it wouldn't be the same name, right? So the name and the file are kind of linked in a way that if you change the file, you tweak some letters or added a comma or whatever, the files now it would have a different name, and that makes it immutable. And if we put that hash in the blockchain, then now if the blockchain obviously immutable, can't change, so that'll always point to the same file. If the file now the IPFS network doesn't hold all the files, someone has to pin it, which just means that there's a reference to it. Somebody's storing it. If one person that's storing it, they try to change it, then it doesn't, then you wouldn't reference it because it changes the name, and you wouldn't find that file, right? So it's still kind of like if you find that file, you've got the right file, and only one person has to hold it. Anybody can hold it. Anybody could hold it and not put it in the network, and put it in the network later if they wanted to, and say, hey, I'm just proving that I put this in the network and time stamped it, 6 months ago, but here's the actual file, and can put it in the network at that point and have it distributed. It's got a lot of use cases.
Yeah, no, it's brilliant. So part of the brilliance of the IPFS protocol is that if you change this file at all, it's going to create a different hash or a different identification to it. So
yes,
it's you shouldn't think of it as a Word doc where I'm going in and modifying it, or if you do, any modification will change the hash or the name of the file itself. Therefore, right.
Yep.
And there's no way to hack that, or it's effectively what the protocol is
not
designed
in any
to
practical way with the horsepower of computing that we have in the next 10 years,
maybe
or whatever. It's
quantum computers from alien civilizations, but we won't worry about that now.
Yep.
Got it. And what was the early days of this? So it's okay, Bitcoin operationally, you understand the concept, and that you wrap your mind around that, and you say, well, why can't this be applicable to files? And then you merge the Bitcoin protocol design with this IPFS. So the merging of the protocol and the Bitcoin is the magic of.
That's part of it.
That's
part of it. That was just one. We'll call it side effect that ended up being like really popular and really useful. Let me jump back a little bit because I did some entrepreneurial stuff with crypto for a while. In fact, including crypto accounting software and things like that. Then I got hired by tZero, which was a division of Overstock, and worked on that. We issued the first crypto bond. So we were working in that area. So I had heard at it was in the Netherlands. I was working consulting for a company. Went to the Netherlands and heard Patrick Byrne speak. He was the CEO of Overstock. He had already added the ability to take Bitcoin on Overstock.com's website, and so he was being asked to speak at various crypto events. So I was at this event, and he basically gave his presentation, and then during the Q&A, he said, "I'd like to issue the first parallel crypto equity, meaning stock." I said, "That would be really interesting, and I think they're in Utah." And so, honestly, I mean, I'd heard of Overstock, right? Everybody had, but I was like, where are they? So I look it up, and it's like they're 10 minutes from my house. And so I'm like,
wow,
that would be really, really cool project. So anyway, it took a little while. One of my friends got hired on first, and then eventually I got hired on and basically helped build that project and issued the crypto bond and learned about Counterparty and Mastercoin and these various other projects that have built a layer on top of Bitcoin that did a similar type of thing, right? So they would be able to issue a token on top of, like Counterparty, for example. You could issue a token on top of Bitcoin. Very secure, but the data that you were able to kind of attach to your coin, all you had was like a shortened URL, one of those bit.ly links kind of thing. You could put that in there. And so you could basically point to a website. So you point to the website, say what your token is. Well, those websites, they kind of came and went. Some were there, some weren't. The bit.ly link was always there. It was like, some, encoded, shortened URL shoved into the Bitcoin blockchain. But you had two things. One, you didn't have like a token name that was your own name, and like an identifiable name. It used, I think, the first block number or something like that. So it had a unique name. It was a little bit like Ethereum contract IDs, where they're just kind of a random string of characters. And so you didn't have that, and then you did the data that people had put in was usually gone, right? You go to this website pointed to by the bit.ly link, and it's gone. So you don't know what the token was about, what it was for. I left tZero, went and worked for a company out of Hong Kong, and they wanted me to build an explorer for open assets. So I built that, basically parsed the whole open assets, which was another project that was building on top of Bitcoin's layer 1 and building assets on top. And they had the same...
What time frame? When was this?
This would have been 2015, I think.
Yeah, okay.
2015. So I built a browser, extended a browser to do that, an Explorer to do that, rather, not a browser, an Explorer to do that. But learned a lot about, inserting, code into the Bitcoin blockchain, where it would accept it, and also its limitations. So some of the limitations it had was it would, if you didn't send some Bitcoin with every asset, so, let's say you created a token that represented, I don't know, a share of something. If you didn't include a little bit of Bitcoin, then Bitcoin kind of ignored it because it said, hey, this really isn't a Bitcoin transaction. We need at least what they call dust. So it was like 543 cents or something like that.
Which is from your perspective a waste, right? Because you're not trying to send Bitcoin.
Yeah, so this Bitcoin was kind of going with it. Also, prior to this, Bitcoin was nearly free, meaning in the 2013, you could add a fee, but you didn't have to add a fee. Everything went through, right? But in 2015, Bitcoin got popular enough that the fees went up quite a bit, right? To the point it was like, at one point it was roughly, to make sure it got in there, it was $30, $40, $50 per transaction. Similar type thing that we're seeing with Ethereum now. So it kind of hit this wall. See, but yeah, but the fee was also in addition to, so to make sure your transaction went through, you had to have the fee, plus you had to have these sats, meaning 543 sats, inside the transaction. For the transaction to be considered a valid Bitcoin transaction, otherwise the network would just ignore it. And every time you sent more, you'd have to somebody else another 443 sats. So pretty soon everybody had 543 sats in addition to their token. And also, if they didn't know what they were doing and they wanted the ability to send it, they'd have to have some Bitcoin to be able to also send it so that they could send to the next person. So theirs stayed at 543 sats. Plus the 543 sats that went to the next person. You had to have both of those. So you either had to give that to them so that they would have it. So you're just basically sending them Bitcoin so they could send it to other people. And there was just limitations.
Yeah, so, it sounds like this is not very user friendly at all. I mean, the average person just wouldn't be able to comprehend or want to mess with that.
It really wasn't user friendly. So fast forward, I went back to Medici Ventures. I ran into Patrick at a political event. Went back to Medici Ventures. Medici Ventures had been formed within Overstock, and Medici Ventures now owned tZero, and wholly owned tZero. And so Medici Ventures was the venture firm within Overstock. And so we went back there.
Wait, can I ask you something? I'm so curious. So Overstock isn't a crypto company. They're they're an online retailer. I believe they sell all sorts of things, but their niche is not in.
Yep.
Yeah, furniture. They probably compete with Amazon and Wayfair and maybe IKEA, and so they probably. I don't think of those types of companies as having a particularly strong engineering culture. They tend to be more operationally based, supply chain based. Was there a reason other than a couple of the people at top understanding the implications of crypto and blockchain? Was there some systemic fuel there? Yeah.
Yeah, there was. So Patrick in 2005 had so a couple things kind of came together that made this happen, I guess. So in 2005, Patrick got a call from somebody that said they were going to basically kind of like hurt his company by shorting his stock, and not just shorting his stock, but by naked shorting his stock. And he kind of ignored it, but they kind of told him how they were going to do it and who was going to be involved and the players that were going to be involved. And there's a website called Deep Capture, and you can go read like the story of it. It's fascinating, long but fascinating story of kind of how this happened. But basically, it started happening, and they basically told him, yeah, you'll get invited on financial TV shows, and they'll ask like these sketchy questions like so it seems like you're kind of doing weird accounting, right? Not direct accusations, but sort of these soft accusations and things like that. And so that kind of stuff happened, and some of the videos are, I believe, still posted. And long story short, he ended up, I think he and his family own a lot of the shares, and so they kind of could recognize that there's more shares being shorted than there should be possible. This is very, very, very similar to what's happening with GameStop, if you follow any of that.
Yep.
And where there's more shares that are being shorted than they're supposed to exist, stuff like that. So this is kind of the precursor to that. So he ended up fighting back. They just picked the wrong guy to fight with, and so he fought back and he sued J.P. Morgan, Goldman Sachs, and anyway, ultimately he won, but it was long fought, kind of thing. But because of that, he learned a lot about and recognized a lot about where the shenanigans were and how the financial system isn't super what's the word, precise, right? There's some sloppiness in it because the settlement takes 3 days to settle. It used to be 3, now it's 2, but there's still some sloppiness. So as long as the broker dealers are kind of backing what, and say, oh yeah, no, we kind of back this, extra shares can be created. And that sounds ridiculous because you're like, well, if extra shares are created, how are the shares worth what they should be, right? But there's been examples. Dole Foods was one where they basically it was being taken private or something like that, and they basically stopped all trading because of that. They counted up. Then they send all your claims for the shares so you can get your money, and there was 33% more shares than were ever issued. And you can go look this up, just Dole Foods and shares, and it's out there in the news stories and whatever. And so the sloppiness allowed extra borrowing. They did put some stuff in place called Reg Show, which is regulation short, and that was supposed to solve it. Because of what's happening with GameStop, pretty good chance it hasn't actually solved it. I've written articles on this.
Do you view the problem with the GameStop as the initial shorting by the hedge funds or the reaction by the folks on Reddit and the market?
Well, I don't know if it's a problem. I think it's
okay.
I think it's like you said, like you started this thing. It was like the Cyprus Bank thing. It's like, is that really the problem? It's like this was like here's a call it a problem or interested a scenario, and there was the recognition that wait a minute, these guys have to buy these shares back, and so I don't know if it's a problem. I think it's I think the people that were doing the Reddit were using the power of the people to expose the shenanigans that were possible within the financial market. So I think the problem is that the financial market doesn't settle instantly like crypto.
Right.
Ravencoin
right. There's people taking advantage of that.
Mm-hmm. Yeah. Yep. And so I think it's fascinating. I mean, to watch it after kind of knowing what I know, right? We learned as part of this thing. We even wrote some software to prevent what was happening with GameStop. We actually wrote software where when you borrow shares, it would be recorded on a blockchain. And so we wrote that software. And I think if that had been put in place and been required for hard to borrow stocks or difficult to borrow stocks, because some of them you can always get the shares, like something that's as freely traded as Apple or whatever is probably not going to be an issue. But for more closely held stocks, if they put that in place where you have to actually identify the actual shares and from who that you're borrowing, and then record that permanently so it can't be undone or tampered with, and so everybody trusts it because it's not run by like one hedge fund or bank or whatever, right? Then because it's transparent. That would have solved the problem, and then that got stopped. I'm not exactly sure why. I kind of left at that point. I was working on this other project in Hong Kong. When I came back, that had been stopped, and I don't have the details on that, unfortunately. And then, so I was working for Medici Ventures. Medici Ventures, also inside Overstock. Oh, and jumping back to answer your original question, because of that, because of Patrick's experience with this, and recognizing that crypto settles immediately, meaning it's all sorted out every 10 minutes, or in the case of Ravencoin, every minute, there isn't this 2-day, 3-day, there isn't the slop, right? It's all settled. You can audit it continuously, right? Or every 10 minutes you can do an audit. And so because of that, I think he recognized the benefits of these digital based securities as opposed to ones that settle, after days.
It makes total sense. I can see how he would have incredible motivation after that experience. Where are we now in terms of, I'm curious where we are today and what you see the pathway as in terms of stock issuance. So today, in terms of publicly issued companies, this is managed by the Dow, the NASDAQ. These are private companies, and they control, working with the government and SEC, they control the issuance of new stock, and there's exchanges like Fidelity and Ameritrade and others where you can trade these stocks, but they're centrally managed. Are there companies now that are using the blockchain to trade shares?
Yes.
Either.
Yeah. Yep.
Where is that?
There are. So tZero is that, right? It's the ability to trade shares on a blockchain, right? So they settle. There's others. I think I'm trying to remember. Abe, Emerge. There's a few others. I've been to some conferences where the CEOs are basically up there, and so it's coming. The ability to issue shares on a blockchain and then have them trade on. Right now, they're called alternative trading systems, ATSs. They can't legally be called exchanges. It's just kind of a legal word that they've kind of
we'll give them that one.
Bias. We'll call it hijack that word, and it's. It is coming.
And are there companies that are you can mention that have at least some of their shares available on these on tZero or other exchanges? Other ATSs?
Yes. So tZero actually has some. Overstock is on it. I should know this. I can tell you where to go to find it. Security Token Markets is basically monitoring that ecosystem. So a lot of them are on tZero, but some of them are on other exchanges, and so these are or other ATSs rather. You can basically see all the ones, the big ones that are kind of already trading and things like that. And so you can sign up and buy these digital shares that settle kind of securely. Yep.
That's awesome. We need another word. ATS doesn't really roll off the tongue. There needs to be maybe a swap market or some. I don't know what the term would be. It
does need a better term.
ATS. That's fascinating. It does represent the whole world of fractional ownership. Obviously, the markets, the public markets, and NASDAQ and the Dow, they allow you to do this, but the concept of it being truly decentralized is so special for all the benefits that the decentralization and blockchain represent. Is there a regulatory, or are we just at a cultural change, between, if Overstock can do it, I assume any company can do it. And so then it's just a matter of time.
There's a lot of regulatory challenges. So these would be considered securities, which means they have to be issued either registered as registered securities or under an exemption. And so the exemptions are Reg D, which means you only sell them to wealthy people. They recently changed that, I think last year, so that you can be accredited if you take certain courses. But that wasn't true before, meaning it was like people who had a certain level of wealth encoded like literally into the law, which is like the most horrible thing I think could ever
Agreed.
be. Like this arbitrary line, like you have $1 million in net worth, or you make over 200,000 if you're single, or 300,000 if you're married, like literally coded into the rules and then you get opportunity to invest in all these Reg D offerings, which is just an exemption to the registration, and everybody else, nope, sorry, you're left out.
You're safe though. You're safe.
Safe.
You're safe.
That's
You're
right.
safe.
You're safe. Yeah. Exactly. So, So, or there's also Reg D. Reg S just means you're outside the U.S. or your feet aren't and also your feet aren't in the U.S. Right? So it's another exemption. It's like the SEC says, all right, we regulate all U.S. people, but if you're not either in the U.S. or not a U.S. citizen, then we don't regulate you. So that's another exemption. Reg CF, which is a new one, Reg Crowdfund. Means that some projects can be sold to retail investors. Basically means people who aren't in these categories of wealth or attainment. Then you can. But then I think the offering has to be done on something where a broker dealer is putting it on a website, so that you can't do your own website, unfortunately. But they recently raised those limits. They were about $1 million, and now they're $5 million. That puts it at least in a category where you could raise money for that. So I think those are coming quick, and I think those are going to get merged with the digital securities or digital tokens, which is what Ravencoin does really well. That's its whole reason for existence. And so I think those two dovetail really well. The idea that you can buy these and get the tokens and then trade the tokens after a certain length of time and things like that.
So does it make sense for companies to say a company is maybe 100 people, they've raised some private funds, maybe VC funds, they're growing at a decent clip, and they're thinking, should we go and raise a second round of maybe the Series C or Series D, or should we go this route of issuing shares on the blockchain and take that path? Do you see like a clear segment of the market where it makes a lot more sense for others, maybe companies who are thinking about IPOing, or I imagine across the stage there's got to be some use case.
I do. So I think there's lots of different areas. I think the idea of raising capital from individuals, where the individuals may put in $10, $50, $100, right? It's not like you can lower the bar because the tokens do all the accounting and things. You can lower the bar on these things. I mean, there's no reason you couldn't do it for like $1 or $10, that kind of thing. Where it's like I'm investing $10 into this new, restaurant idea, this new project, this new whatever. So think of Kickstarter type things. Only Kickstarter is sort of limited to, you're like, that is a fantastic idea. I want to be a part of that. But all I could buy is the item that you haven't created yet. But I really want to be a part of this, right? I want to be, I want to help you get there, but I don't want to just buy one item kind of thing. And that's where this fits, is in that space where it's like a Kickstarter, but it's like, here's the idea, here's and so it could be like very, like seed round almost, funding, but it's you're now a co-owner, a part owner. It's a security, and it'll fall under securities laws. But the Reg CF has lighter accounting requirements than a full IPO. Full IPO nowadays, it costs millions. I mean, it's just not even practical unless you're at a certain stage. But in my view, this is my personal opinion, we should have the ability to just say, look, I want to start a restaurant. Who wants to join me in this and own a share of it? Right, and they offer it, and the person does it, and then the rewards, dividends get paid back through the token. So from a technological standpoint, in fact, this is literally built into Ravencoin. We call it rewards. The ability to say, all right, here's the pro rata share of everybody's ownership. We got, we made $10,000 this month, this week, this quarter, whatever. take that $10,000, turn it into Raven, send the Raven out to whoever, pro rata to the owners. That costs almost nothing to do and is like a one statement, one line in code. It's kind of built in.
That's awesome.
That's where I see things going.
Yeah, it almost seems to me that there's more of an early use case for non-traditional companies or non-startup companies. I think of AngelList syndicates and Republic as the crowdfunding platform. They have a crypto focus. I actually interviewed the CEO there, and I don't think they use blockchain-based shares. They're just maintaining a ledger and they're issuing it the same way, but they're using the new methodology, I guess, the new way of raising from lots and lots of people on these syndicates. Yep. But I think of the it's even more complex in a sense with a restaurant because you have dividends getting paid out. In the case of a startup, you only have, if there's 10 million shares in the company, there's a cap table to show who owns those, and that's it. Unless the company is acquired or they buy a company and then they change up the share. But it's really like a pie sliced up as many times as you want. Where in the case of unless I don't think startups issue dividends. I mean, I can't think of a scenario where they would traditionally do that. Whereas a restaurant or more of a company that has a revenue share model where they're not planning on 10xing, they're just planning on growing the cash flow.
Yep.
That makes a lot more sense to me.
Yeah. And even if you're not paying the rewards or the dividends out, it's still basically the token becomes the cap table. One of the challenges we have more so in the U.S. than in the rest of the world is the KYC requirements, right? And so tokens, you're familiar with with Bitcoin, right? Typically the name is not attached to the address. As soon as it becomes a security, there's some requirements to attach the name and things like that. We built in some features, some capabilities into Ravencoin called tagging, where you could tag the address with KYC, right? It's like almost attaching another token to an address that can't be removed. That basically says this address has been KYC'd, meaning somebody has it. The information isn't on the chain. It's not a doxing kind of thing. It's stored in somebody's vault, but that has been done. Right, so you can attach this, and that way, and then the software itself, meaning Ravencoin itself, can basically allow all the people who've been KYC'd to trade with, meaning the token will only move to KYC'd addresses, and it has a logic.
That's so much smarter.
Say KYC'd and accredited and things like that. So it sort of solves this problem, but without putting that information on chain or whatever. But if a government ever needed it, it would be available. But that's kind of a rare scenario. But
right.
The way
I was going to ask you, is that a common practice, or are there other major coins that utilize this technique? Because typically now every exchange asks for KYC. You might do 10 KYC processes if you sign up for 10 exchanges.
Yeah. So the other alternative that I've seen out there, and one of the reasons we added the capability to Ravencoin the way we did, so I was working for tZero, and they were doing it via an Ethereum model. And so they did what they call whitelisting, which is adding to the smart contract all the addresses that are allowed to trade that coin, right? So just add address, this address, and this address, and this address. The problem with that is it works great for maybe 10, 15, 20. It gets really bad. Two things make it really bad. One, it's sort of like this list, right? Where you have you go to send the token, right? The ERC20 token, and it has to check this list. And as this list grows longer, it takes more and more power to more and more cycles, compute power, Ethereum virtual machine steps to check this list. And as that list gets longer, it gets costlier and costlier. And as the gas prices go up, and we already know that's kind of a problem, it gets more and more expensive. And so it's just kind of a bad way, unless you're just have a few users, really bad way to do it. It got really expensive really fast. And so by doing it the way Ravencoin does, it basically tags it, and that those tags are recognized by every node, are basically indexed, so it already knows. So it's really, really fast to check it. It's already stored. It's just kind of a better way to handle it. And so
yeah. And how was the project organized in the early days? Was it
that's a great question. Yeah. So Bruce Fenton was on the board of tZero. He had this idea for a project that basically used Bitcoin's code, very, very solid code, to do assets, to basically create these assets. And so he had already had this idea prior. And so he started talking about it in October of 2017. And so he got some Russian programmers to work on it. They kind of dropped the ball. Something happened. The excuse was somebody got in a wreck. Whether it's true or not, I don't know. But basically it didn't work out. Patrick basically said, hey, we've got programmers here in Medici that might be able to do that. I was in the accountant's office trying to explain how their Bitcoin that they owned had babies, and they now had Bitcoin and Bitcoin Cash, which is kind of a weird thing because that usually doesn't happen.
With
dollars,
the fork, yeah.
And Patrick knocked on the door and mentioned this project, and I just happened to have the skill set. So I was a C++ programmer, and kind of former life, and so I had the skills, and so we started working on it, and we had some brainstorming stuff. We came up with an idea for mining with Joel. We basically had over wings, we were talking about how to do some of the stuff that Bruce wanted to do that was not really possible, but in the process of that, we kind of figured out a way to make things work. And so we had this rotating algorithm for mining, which is somewhat unique. And so that was built into the first one. So it was X16R rotating mining algorithms. And the intent for that was to prevent ASICs. So ASICs are just custom built machines for mining. And there's nothing bad about them. It's just that they tend to concentrate mining to big farms, right, where they can afford to buy a whole bunch and things like that. You see this in Bitcoin now, where a lot of big farms with S19s, just racking and that kind of thing. And so there's a lot of big farms that have a lot of the horsepower, a lot of the mining horsepower, where it'd be better if like everybody mined would be the ideal situation.
And do you say that because of security of one mining organization having too much influence over the protocol?
Yes, yeah, and you kind of know where those places are, right, that are using lots of power and things like that. So if there was ever to be a threat, and I'm not suggesting there is, it's still pretty well distributed. But if there ever was to be a threat, knocking on those doors would be the first step, right? I mean, it already happened kind of in China, and they said, hey, shut down your mining. Well, if the mining was actually like an individual person running a gaming rig card in the thing, probably wouldn't be an issue. They would need to shut down. But if you're a warehouse with fans and big power things and everything, and the government says you need to shut down, and you're like, okay, what do we need to do? So the goal for Ravencoin has been to distribute that mining. We now have an algorithm called Kapow, which is best. It basically uses all of a video card, all of a gaming video card, and so if someone were to make a specialized device that mined Ravencoin, it would look a lot like a video card, and so without the economies of scale that the video cards already have, right? That NVIDIA and AMD have, keeps it pretty well distributed.
Got it. And I'm curious, when you were sitting around the table in 2017. Scoping out the details of the project. Is this now, I mean, we're now 2021, wrapping up the year. Are we beyond your wildest dreams of this project, or is this like where was your expectation in the beginning on this compared to where it ended up playing out in the last 4 years?
I know at the time there's like tens of thousands of different, at least 2, 3, 4, 5,000 different projects. So you feel like one of those, right? You're just another coin. One of the advantages we had was the fact that it was being developed. Well, we had several advantages. Almost we'll call it a magic combination that came together. I mean, the fact that Patrick and Overstock and Medici Ventures kind of funded the team made one thing really, really, really good, which was we didn't have to raise any money. And so that put us in kind of this really legal, clean area. And Bruce Fenton was a stockbroker, knows the rules, right? Series 7, he has the licenses. So he knew keep in mind when this was too. This was like the 2017, 2018 timeframe when all the ICOs are happening, right? So everybody's raising money. And in some ways, you kind of feel stupid. It's like, why are we doing this with like just a team of like 4 or 5 people funded by Overstock, and not like raising? Look, EOS is raising $1 billion and $2 billion, $3 billion.
Yeah, it's free money. Why not go get the free money?
Free money. Yeah, it's like, and we got a real project and real team. Why aren't we doing it this way? But I credit Bruce really for that, kind of going, nope. These are basically securities. When you offer something and you make a promise and you take money from people and there's an expectation of profit, you kind of hit all of the Howey test things. And so we didn't have any of that. We just didn't take any money from anybody. We kind of built it using the funds from Medici Ventures. Small team, but we built it and then launched it. Fair launch, so everybody mined Raven into existence. So nobody was kind of like, there was no holdback or something saying, oh, we're going to pre-mine this much or hold back this much for a future development team and things like that. So that was never done. So basically all the Raven that's out there was mined into existence. Medici holds some, but they mined it or bought it from other people that had mined it. And so that made it really, really clean from a project perspective. And so we don't have any of the kind of the issues of some of the other projects that have now. So.
And is that, I imagine people do that to draw early incentive, early interest in the projects. Was Ravencoin in a position early on where there's enough interest in the community to start mining from the beginning, as opposed to airdropping or any of the other things?
There was. So we had some advantage in that, people were looking for projects to mine. So there were like calendars of projects that are starting up. So we were able to kind of get into that where you could mine with the CPU when it launched. So anybody could mine. So the software for Windows, Mac, and Linux miner, the core code itself mined. You just basically said turn on mining and it mined, and so you could mine on a Mac or Windows or Linux, and so that helped, right? So we got lots of miners initially. The Overstock actually talked to there's rules at Overstock. You can't use your laptop for personal things. Patrick worked out with the attorneys to kind of change that so that you could mine Ravencoin. So all the people at Overstock could mine Ravencoin, which is great. So you had kind of those things to start with.
Yeah. That's super interesting. And I'm curious how you're spending your time now. So this is 4 years later. The project is far beyond even what you can contribute to it today. Are you still contributing to the code base in a meaningful way regularly?
So not really to the code base itself. I am monitoring it. So I'll kind of one of the things is important, especially a project of this size, is that stuff doesn't sneak in. That we did have a problem a year and a half back where some stuff got snuck in that shouldn't have, and it caused some
malicious stuff, or just
malicious stuff. Stuff that allowed extra Raven to get created. So that was pretty bad. So after that point, the shields have gone up, alerts. So there's more people monitoring the code. There's more eyeballs on it. More slowed down quite a bit in terms of the kind of pace of change and things like that. So basically, the team from Medici is gone. Medici's actually wrapped up. It's now just no longer has employees. It's basically just a fund of companies that Medici invested in, operated by, I think, managed by Pelion Venture Partners. So so basically, Medici's effectively gone. It's just a financial thing now. But part of that was that since Ravencoin was an outlier, it wasn't shares in corporations, which all of the other investments were, like 18 other investments, some number of investments somewhere in that range were. But Ravencoin was not. It wasn't a company. It isn't a company. It's not. It's a project, an open source project, fully open source, and so it's code, and so but to protect that code, or at least kind of monitor the ecosystem, Overstock or Medici Ventures before it dissolved or turned into a fund, put money into helped create the legal entity Ravencoin Foundation. Put some money in it to kind of monitor it, help run nodes, to monitor the ecosystem, to do different things, kind of around Ravencoin. It's not, I'm not going to say it's in charge of it. It's just like an entity that's there to assist, if you will. And then I'm the president of it, has board members, and kind of a charter to protect Ravencoin, and bank account, and donations come in from it. Ravencoin is also a great NFT platform, and so the NFT projects have been sold and auctions done where a percentage of it goes to the foundation, and then those funds get used to kind of monitor the ecosystem.
Yeah. Is the foundation also investing in projects? I know that's kind of a common use of funds.
It doesn't have a lot of funds. It is investing in some, or raising funds for some. So there are projects that we want to do. So we want to have stable coins, 2 different kinds of stable coins. So there's 2 active projects that we want to fund, where it's third parties that are basically doing the kind of doing the work and the code, and using Prime Trust to back it and things like that. But they need a certain amount to be able to do that, and so there's addresses out there that are for donations specifically for those projects. And then there's other projects, mostly on the core code. Some projects related. So it was on Electrum for multi-sig and things like that that are funded. So that we consider those bounties. So there'll be a bounty address that's put out. A bounty amount, and if someone basically kind of tackles the project, does writes the unit test, functional test, etc., and submits it, then the bounty gets paid out. And we've done quite a few of those.
Interesting. I'm curious now. What projects are you most either involved in or interested in as of today?
Projects around Ravencoin, or in general, or
in general? Yeah, I as wide a scope as you like.
Okay. So I'm still fascinated by the entire ecosystem. By ecosystem, I'm not a Bitcoin maximalist, right? So I'm the idea that all of these things working together. So I would like Ravencoin. We have a project, an extension to Ravencoin called Pay to Script Hash, and that's going to allow assets that you create to be held like in multi-sig and then be issued or transferred over to other chains, like a Binance Smart Chain or to an Avalanche or something like that, where they can participate. Those tokens, which would have value because they might be a share of a house, a share of land, a share of wine, a share of something valuable, and you might be able to borrow against those and things like that. So I want to get those tokens to be able to kind of hop over to the various chains, not one in particular, but over to the various ones, because they're all kind of as Ethereum gets really expensive, some of the other ones that are either faster because they're more centralized, or faster because they're just not as used or whatever. Those become places where the same automatic market making capabilities that are on Ethereum now, like a Uniswap, can move over to these other Ethereum virtual machine chains, and then they have the ability to trade these, borrow, lend, etc., against real assets. The real assets, it's probably best to create those on Ravencoin, and so as long as you can kind of hop those over to the other chains to participate in the what smart contracts do best, right? Which right now is kind of exploring these other financial options. So that's probably the most fascinating part to me is we want to get that launched. The code's been written, it's been tested, it's being tested right now. We've been slow and methodical and make sure that kind of all this stuff is safe. But once that activates, we already have that ability right now to hop, let's say Raven, RVN, over to another chain as P-Raven, and then you can borrow against it and things like that. We already have that capability because that was built into the original Bitcoin code, which we used. But Pay to Script Hash, which is the ability to do more complex scripts, basically, for assets, is being added or has been added to Ravencoin. And once that launches, then we should have more Ravencoin assets being kind of going out into the other ecosystems. So that's what I'm probably most excited about.
So I wanted to ask you, Tron, what do you think of stablecoins in terms of the structure going forward? I know currently most of the stablecoins out there today, I'm thinking Tether, USDC, there's a lot of them now. They're effectively represented by a company who's managing a private bank account somewhere, and they just have $100,000 in the bank account, and so there's a $100,000 stablecoin. What do you think that looks like? Because clearly the U.S. dollar is not the optimal way to measure stored value in a stable way. I'm curious your thoughts.
So we actually have so I like that both exist, both types. Well, there's actually two types, right? There's both denominated in dollars, because that's kind of what people consider stable, and we consider it stable because that's what we're pricing things in. That's the goal there. Is price stability. So can you hang on 1 second?
Yeah, sure.
Okay, sorry about that.
No worries.
So there's actually two projects going on Ravencoin right now, funds being raised. One is exactly what you said. It's a stable coin where dollars would be stored by a custodian, and so it would be a one-to-one mapping of a Ravencoin asset token that's representative of the dollar, and those dollars would be, and so it would be like a Tether or USDC. Right? So there's that one. There's also another kind where the dollars are borrowed against the collateral, and so those are also possible. So that would be one where, let's say you had Raven. Let's say you had, pick a number, $10,000 worth of Raven. You can move that over to one of the networks that runs the EVM, and so you would be able to borrow, let's say $2,000 or $3,000, $4,000 stable coins that are against the $10,000 of Raven, right? So over collateralized, and those are relatively safe because there's algorithms in there that if the collateral value gets too close, then and that would be really up to the person who's putting up their collateral. When that gets too close, let's say they borrowed $3,000, and when it gets to, let's say, $5,000 instead of $10,000 worth, either because the price of Raven dropped or something like that, someone else would be given, the person that borrowed would be given the option to increase the amount of Raven provided as collateral, to keep that buffer high enough. If it got too close, what happens is the trigger gets switched, and it allows someone to basically come in and say, okay, I'm going to take that collateral by basically paying off the loan, that dollar-denominated loan, and they basically take the collateral, and so that model. So we actually have two proposed projects, one for each of those two models on Ravencoin.
Yeah. Do you think there'll be Oh, go ahead.
Go ahead. I agree with you. I mean, the dollar isn't kind of the great. The inflation rate is much higher than kind of we're being told, et cetera. But I mean, right now it's kind of like so are lots of the other. I wouldn't do it against some of the dollar's competitors either. So.
Yeah, it's kind of where we are as a global financial system. Do you think that things are a lot more inflated than the represented reports by the government? Yeah. I
do. I mean, the reports come out of the government, they're like, oh, we're targeting 2. Oh, we got 5 or 6. It's like, oh, okay, well, houses here went up 34%. So as long as you don't need a house, right, or rent,
or a car,
you can say that, but that's for someone trying to live. That's a big portion of what they need to buy, right? And then they have kind of the tricks that they do. It's like, okay, yeah, well, steaks and hot dogs, they're kind of the same. They're both food, stuff like that. So, I mean, there's a lot of tricks they use. But I mean, you can see it and see it in like short period of time. I mean, this last year, I mean, you can go in and just like pay attention to prices of meat and things like that. You can just see it, and then some stuff, I don't know, necessarily related to inflation, but it seems like seems like the supply chain and the inflation are somewhat soft linked. I feel like, right? It's like some stuff is just not available, right, at any price, right? And so the price to get it here may just be, we're kind of in this middle of the road. It's like by the time it gets here, they're going to have to price it to, much higher because they realize, it's going to sit in, in a ship for 3 months, and the trucks now require more money, and so I think
I think you're. I mean, the two factors to me that just seem undeniably true is that we printed off trillions of dollars that the government just said, here's way more U.S. dollars in circulation. So that's inflation by default. It's like the definition of it, more money in the circulation, and then the lack of the flow of supplies in the supply chain. To your point, create both of those two. I was interviewing the founder of Shift, which is a company that allows people to buy and sell cars, and he was saying that they're like 30% more expensive used cars today than they were a year ago, which is nuts.
Yep.
A lot of people buy cars. Yep. Especially in this country.
They do.
Yeah.
Cars and housing and food and stuff like that. So it kind of, and I think Michael Saylor does a great job of kind of pointing this out. It's like it kind of depends on your lifestyle of whether or not you're seeing the inflation, right? If you have to be out there living, then it's getting pretty steep.
Yeah. Cool, man. Well, thanks so much for diving in today. I really enjoyed the conversation. Do you have any, I guess, for people who are on the edges of crypto or want to get into it more, anything that you would want to say, either people to follow or places to go, or just.
So this is a little bit biased, but honestly, Bitcoin's great, but Ravencoin's friendly. So if you're jumping in and you just want to learn and access things and to kind of experiment, it's relatively inexpensive. It's 9-10 cents. You can get a bunch. You can create your own assets. You can play with it. You can experiment. People will answer your questions. We've got when I say we, it's the community, right? So actually, the foundation doesn't run the Discord or the Telegram. These were people, volunteers that were early on in the project that own all the servers and do all of that. We had some rocky starts, where people, rage quit, early on. Some servers went away because there was no company to control it. But it's really open. If you're going to follow some people, you can follow me at Tron Black on Twitter. But more important than me is follow Leon_Texas, Aaron Day. There's just a lot of really awesome, cool people. If you're into mining, follow at Bits Be Trippin'. He does a lot of videos for both Bitcoin mining and also Ravencoin mining. If you have a video card, gaming rig, keep playing games with it. But when it's running at night, flip it on, have it mine Ravencoin at night. It's an easy way to get it. You don't have to buy it. It'll just show up. It's just a couple of lines to configure, and the Bits Be Trippin' videos will show you how to do it.
It's awesome. Yeah, especially if your parents are paying the electricity bill. Why not?
Exactly. Yep. Ravencoin.foundation. So just Ravencoin.foundation has the footer. At the bottom of that's a big ugly footer, but it has lots and lots of links to. They're all organized by section. If you want to go into the NFT market, if you want to create your own assets, if you want to buy some, if you want to mine, all those sections are there. Ravencoin.org also has a lot of similar information.
Cool. Well,
Tron, thanks for doing this.
Yeah, my pleasure. I love it.
I want to say Ravencoin doesn't have a marketing department, so if you're wondering why it's not in the top 10, it's probably that. There isn't marketing. This is sort of grassroots people, individuals learning about it one at a time. And so, we don't have the $1 billion to talk about it, but shows like this actually make a big difference. So I appreciate it.
Well, thank you, sir. And continued wish you the best on the mission and the project.
Okay.